is Cecil B. Moneygetter, host of Money Talks, a new financial news upload that is laser focused on digital finance, cryptocurrencies, robotics, electric vehicles, stocks, the cannabis industry, and much, much more. Tune in and join us every Monday, Wednesday, and Friday at 7 p.m. Eastern on our Information Meets Execution YouTube channel as we bring you financial news uploads, one trending topic at a time. And don't forget to stay listening, because money talks. Good evening, good evening, good evening, and good evening. Today is Monday, September 16th, and you're watching Money Talks. First up, in trending tech and media news. Why are Trump's media and tech stocks in a free fall after a second assassination attempt? Trump Media and Technology Group plunged 51.21% in the past 6 months and 24.72% in the last month, living up to its meme stock status. The latest jolt came after an apparent assassination attempt on ex-President Donald Trump at his West Palm Beach golf course. Trump, who still holds a majority stake in the company, was unharmed. However, the incident adds more volatility to an already turbulent stock. Shares briefly ticked up on Monday before giving up ground and dropping by about 4% to $17.28 at last check Monday. Technically, things are looking grim for the meme stock. Add in a MACD indicator of a negative 2.52 and an RSI of 36.38, and the signal is clear. Trump Media is in bear territory. Despite a recent bump after Trump announced he won't be selling his shares, the stock quickly fell back to reality. Insiders of Trump Media are gearing up for the expiration of the lockup period on September 19th. This could unleash a wave of selling from those who've been locked out, putting them even more downward pressure on the stock. The twice impeached former president has vowed to hold on to his shares. Other insiders, meanwhile, may not be so committed, potentially making Trump Media stock even more volatile. The stock's rocky ride isn't just a case of bad timing or market sentiment. The company reported a 30% drop in second quarter revenue, bringing in just $836,900, while the company losses narrowed to $16.4 million from a year earlier. Trump Media is also facing operational headwinds that even his presence may not be able to fix. As Trump Media continues to meme stock journey, investors are likely wondering if the narrative surrounding Trump and his media empire will ever translate into a more stable future. For now, the Trump Media chart looks more like a political thriller than a success story. Get in the comments and let us know what you think and how you feel. Next in news from Wall Street, is Invesco's dividend ETF on your short list? Designed to provide broad exposure to large cap value segment of the U.S. equity market, the Invesco Dividend Achievers ETF is a passively managed exchange-traded fund launched on 9/15/2005. The fund is sponsored by Invesco. It has amassed assets over $697.06 million, making it one of the average-sized ETFs attempting to match the large-cap value segment of the U.S. equity market. Large-cap companies usually have a market capitalization of above $10 billion. Overall, they are usually a stable option with less risk and more surefire cash flows than mid and small cap companies. Value stocks have lower than average price to earnings and price to book ratios. They also have lower than average sales and earnings growth rates. While value stocks have outperformed growth stocks in nearly all markets, when you consider long-term performance, growth stocks are more likely to outpace value stocks in strong bull markets. Expense ratios are an important factor in the return of an ETF and in the long term. Cheaper funds can significantly outperform their more expensive counterparts, other things remaining the same. Annual operating expenses for this ETF are 0.53%, making it one of the more expensive products in the space. It has a 12-month trailing dividend yield of 1.65%. It is important to delve into an ETF's holdings before investing. Despite the many upsides to this kind of funds, like diversified exposure, which minimizes single stock risk, and most ETFs are very transparent products that disclose their holdings on a daily basis. This ETF has heaviest allocation to the information technology sector, about 21.40% of the portfolio. Financials and healthcare round out the top three. Looking at individual holdings, Apple Inc. accounts for about 4.31% of total assets, followed by Microsoft Corp. And Broadcom Inc. The top 10 holdings account for about 26.99% of total assets under management. Performance and risk. PFM seeks to match the performance of the NASDAQ U.S. Broad Dividend Achievers Index before fees and expenses. The NASDAQ U.S. Broad Dividend Achievers Index is designed to identify a diversified group of dividend-paying companies which have increased their annual dividend for 10 or more consecutive fiscal years. The ETF has gained about 16.28% so far this year, and it's up approximately 3.33% in the last 1 year. In the past 52-week period, it has traded between $35.25 and $46.01. The ETF has a beta of 0.83 and standard deviation of 13.92% for the trailing 3-year period, making it medium risk choice in the space. With about 426 holdings, it effectively diversifies company-specific risk. Invesco Dividend Achievers ETF holds a Zacks ETF rank of 2 buy, which is based on expected asset class return, expense ratio, and momentum, among other factors. Because of this, PFM is a great option for investors seeking exposure to the style box, large cap value segment of the market. Comments and let me know what you think and how you feel. And up next in finance news, billionaire Sheng Cao is scheduled to be a free man, free from the big house. Prison, that is. Jinping CZ Cao, the founder and ex-CEO of Binance, is set to be released from prison on September 29th after serving a 4-month sentence, according to information from the U.S. Federal Bureau of Prisons. CZ is scheduled for release from the Long Beach Residential Reentry Management after having served his 4-month sentence at the Federal Correctional Institution Lompoc, a low-security institution in California. On August 22nd, his location was updated to the Long Beach RRM. He was charged for allegedly failing to implement an effective anti-money laundering framework. The BOP describes RRMs as liaisons with federal courts, the U.S. Marshal Service, and state and local corrections, assisting inmates nearing their release dates. The sentence was part of an investigation by the U.S. Department of Justice into Zhao's and Binance's activities. In November of 2023, CZ paid a $50 billion fine and resigned as Binance CEO to conclude the multi-year investigation. The exchange also faced a $4.3 billion fine. Despite facing a hefty fine, CZ remained on Forbes' richest crypto billionaire list, amassing over $33 billion from Binance. As of April 2024, Binance, founded by CZ in 2017, quickly became one of the most popular crypto trading platforms globally. CZ is the wealthiest person to have ever spent time in a U.S. federal prison. Following his sentencing for anti-money laundering violations, CZ expressed gratitude toward his supporters and announced his focus on education, initiating a project named Giggle Academy in May of 2024. In the comments, and let me know what you think and how you feel.
On our Information Meets Execution YouTube channel, you can also check out the 734 Listening Library YouTube channel for self-help shorts and audiobooks. Follow us on Instagram at 734 Miscellaneous LL.